Hey, welcome to the 40 Finance channel, everybody. Today we're talking about energy stocks, and if you've been subscribed for a long time, you'll know that this is a pretty rare occurrence that I would bring up oil and gas stocks. But I went down a little bit of a rabbit hole last night, just kind of clicking through and looking at prices and valuations, thinking to myself, you know, this oil and gas trade is super crowded right now. Everybody says, you know, leave tech behind, get into energy. That's where the money is this year. And to be honest, oil and gas stocks, honestly, it's something I've never really been interested in. I think that the industry is difficult to project. And I also think that it's controlled with some puppet strings by different countries and political entities that makes it hard for a person like me to really study the metrics and get a feel for, you know, where's the growth coming, what are the potential hiccups, stuff like that. But just for fun, I thought I would take my own perspective for looking at stocks and apply them to these oil and gas names and just share my thoughts on it, just from a sort of unique perspective as a guy who doesn't really follow the industry. So that's what today's video is, just my opinion on, is there any room left in the energy trade? Is there money still to be made, or has the bus passed? I'll give you my 2 cents on it. All right, the first place my mind went was, you know, what is the impact of crude oil prices on these stocks? So what I did is just take crude oil prices, which are the candles, and I applied it against the XLE, which is an oil and gas ETF, the most popular one, or certainly the highest market cap out there. And the XLE is in the red line. And you can see it's been an interesting relationship. Prior to 2015, these guys sort of traded neck and neck with each other, a little bit of separation, but general trajectory is the same. Then you had this spread here between 2015 and let's just call it 2019. The XLE was significantly overpriced as it compares to the price of crude oil. Now, that was also the peak of fracking and everything else, and unfortunately, I don't know the story behind this separation here, but coming out of the pandemic, and I will zoom this in a little bit, we see that XLE is still trading in the same range, or has the same sort of behavior as crude oil prices. But if you consider sort of the inverse relationship that started here, you could certainly argue that the XLE is not getting the same price valuation multiple maybe as crude oil is. So again, being a noob in this sector and just eyeballing it, I would say that this chart is promising for XLE if you assume that crude oil prices will continue to go up. Now, speaking of those prices, this is a 5-year chart, and we are at 80 some odd dollars today, 82.42. And the last peak that I could find, at least on this 5-year chart, is September of 2018, where it looks like oil was $74 a barrel. So over the past 5 years, this appears to be one of the higher points for oil prices. So that, of course, begs the question, is oil at itself at a peak price, or are there scenarios where oil prices go higher? And that simple question, in my opinion, is one of the most difficult things to answer in a sector like this, and almost requires like an economics degree and familiarity very specifically with the oil trading markets. All right, now let's switch over to SeekingAlpha and compare the top oil companies in terms of market cap anyway. You got Chevron, Exxon, BP, RDS, and ConocoPhillips. And one of the things I was interested in while researching is just, you know, where do people see these stocks on an individual level? And in SeekingAlpha's quant formula, they have a very bullish rating across the board, all 5 of them. Author rating, which is basically independent analysis, very similar to what we're doing here today. You've got 3 bulls and 2 neutrals. And then on Wall Street, you've got 4 out of the 5 with a bullish rating. Now let's go a little bit deeper on Quant Factors. So what stood out right off the bat is the valuation side. You've got a couple that are sort of midline, right? C minus, C plus, and even a D over here. And you certainly have no A pluses from a valuation perspective, at least as it relates to SeekingAlpha's Quant Factors. Now, the growth scores are good. The profitability scores are good, momentum looks solid, and EPS revisions here, which is something I study very closely, at least with the stocks I invest in, those look pretty strong. A minus, A minus, A, got a C plus for Royal Dutch Shell, and an A minus for ConocoPhillips. Now, one of the things that I like about positive EPS revisions is that typically it means your PE ratios are coming down, especially when you start to look at things from a forward perspective. By the way, quick interruption here. If you're new to the channel and interested in learning more about SeekingAlpha, I have a very intriguing special discount with my affiliate link down below. So feel free to check that out. And if you do sign up, I do receive a small commission. But I think SeekingAlpha is a great service, and you have the opportunity to save a significant amount on a one-year subscription by using my affiliate link. All right, let's stop here for a second and look at some of the price stats. So here's our last close across the top, and our 52-week highs are really neck and neck with these two. So this is where my mind was going when I first got into this research was, you know what? These prices are high in perspective to 52-week highs. What's really left for the stock prices of these companies? Obviously, you get great dividends, so you could certainly make that argument. But is there any price action left with these trades? Chevron basically at 52-week highs, same with Exxon, same with BP. Royal Dutch Shell down about 5%, and Conoco's pretty much flat with their 52-week highs. Now, that's concerning, I would say, on the surface, but we know that oil's digging out of a rut from COVID. So let's take a look at the actual valuations. Kicking things off with Exxon here, we're going to look at forward PE. So this is an annual table of data. Our current forward PE is, call it 11. We go back into last year, and it's really irrelevant because of what happened with COVID, right? So let's start at 2019. You had a forward PE of 1779 at that point. And let's just go way back in time, starting at 2011. You had 10s and 12s, 15s and 20s. Remember, this range on the first chart we did with crude oil prices showed a time when perhaps the XLE was overpriced compared to crude oil prices. So you have these 20s here. But if we were going to say maybe the normal of the normal, I would argue you're probably in a stretch between 9 and 13 at the highest of ranges. And so back to today, forward PE of 1098, I wouldn't say it's necessarily on sale, but you are here at a healthy range when you think back to historical times. All right, how about Chevron? They're in at 12. We'll do the same thing. We'll just skip back in time. 2011, you had 8s, 9s, 16s. And then when we had the separation between XLE and crude oil prices, it was trading a little bit higher. But today here at 12, I would say I would guess it to be just a couple points higher than maybe historically normal times. Don't forget, it only takes one analyst upgrade of an EPS to bring this number down right back to those numbers we saw in 2014 and 2013. All right, how about ConocoPhillips? Coming in at 8.5 today. Scroll back into time, 2011, 8.8, 9.4, 10, and then a 21 in 2014. So if we're just going to take these numbers for normalization, I would say anywhere between 9 and maybe 12 at the high end. But here we sit today at 856. That is certainly a couple decimal points below the lowest number we saw back 10 years ago. So ConocoPhillips, yeah, I mean, it's not on sale by historical standards, but it's far, far away from overpriced, and I would definitely feel a margin of safety for owning this one at today's price, at least looking ahead for the short term. All right, so what's the bottom line looking through those data points from somebody who's far outside the industry? You know, what are my thoughts on the energy trade? Is there still some room left to run? And for me, at least from what I've seen, the bull bear case lands squarely on the price of crude oil. And if I was going to invest in this world, I would be digging in deep to see what are the percentage chances that crude oil goes from 80 some dollars, where it is today, and is leading through a higher trajectory. Can it get to 100? That's probably about what you're going to need to see some major movement on just sheer momentum from crude oil prices. So for me, that's one bull case. But the other side of it, depending on how spooked you are in the market's recent activities, is of course the dividends that these companies pay out. You know, most of them are in that 4% range. So depending on how nervous you are about other stock opportunities, there might be something here at the bare minimum with oil and gas stocks to say, hey, they're fairly valued right now, and that can make for a solid investment, certainly over the short term when we're expecting a lot of volatility. Now, as far as the bear cases go, at least over the long term, 5 years, 10 years plus, you're looking at an industry that's flat, if not tiny percentage points down over the future, assuming renewable energy and energy conservation efforts on a high level take shape. So there's a reason no one's ever going to call these stocks growth stocks, right? Because their revenues are probably not going to grow, you know, much past a percentage point or two once we get back up to par. Now from there, a company can produce EPS wins even with flat revenues by cutting costs, buying back shares, things of that nature, and I'm not familiar enough to say if oil and gas companies would do that. Now, if I was ever compelled to get in this trade, I would almost certainly pick the XLE ETF, which represents all of the companies that we've seen here today. And if I got super bullish on gas prices going up, you know, then maybe you look for a leveraged alternative to XLE, which could be a way to profit off of a short-term pump in oil prices. You know, generally speaking, oil prices don't stay high in the United States for very long. You have periods of time, right? They can be 6 months, they can be 1 year, but the government typically intervenes at some point to bring those oil prices down. All right, guys, so that's an outsider's view of energy stocks, at least from where I sit. Now, if you're in these stocks, leave a comment below. Let me know why you're super bullish on them and where you think they're going to trade. I'd be interested. Again, I'm coming totally from the outside on this and just sharing the normal numbers that I look at with stocks. All right, hope you enjoyed this. Please give a like, subscribe to the channel, all the things. We'll see you on the next video.